Welcome back to Author's Note. Today we are looking at South Africa and the turmoil in its precious metal mines. Labour unrest, which began at Lonmin's Marikana platinum mine, where 44 people have been killed, has spread to other producers and to the equally significant gold industry. And with employers, the trade unions and the government all deeply involved in the crisis, it's casting a long shadow over the whole South African economy and its financial markets. Here to discuss these issues with me is Jeff Gable, Head of African Research for Barclays. Jeff, if we look at this chart, what is it that these share prices of the mining companies is telling us?
We can see very clearly from the chart where the illegal strike started on the 10th of August. We can see the chart slipping very precipitously down to the 16th of August, where we had the horrible news of the shooting from the police forces in South Africa, and this prolonged illegal strike in this part of the platinum sector spreading to others. The question mark now, as we have the news headline that Lonmin has come to agreement with its workforce, that the workers are coming back, the question that really matters now is what is the profitability of the mining sector, of the platinum sector, going to look like in a global environment where demand remains weak and in a South African environment where costs continue to rise?
And what do you think the profitability looks like in the future?
Well, it really depends on the price. We know that at a platinum price in early August, before the difficulties in South Africa, that platinum price may seem quite high for anyone who has to purchase the metal, but we know that for the producers in South Africa that have been hit with rising wage costs, that have been hit with rising electricity costs, that have been hit with increases in costs in transport and what have you, that wasn't a price where the sector was particularly profitable. Of course, one part of those costs has just increased further.
If we look at how the industry fits in the overall scheme of things in the South African market and look at this chart now, we see that in fact investors seem pretty pleased with the way those shares have been going this year. Why is that? Well,
certainly one of the things that it highlights is that the South African equity market is much less about South African specific resource companies and much more about a broader economy in South Africa. Mining itself is only about 6% of GDP, but also companies within South Africa that have very substantial global operations. The chart's also quite interesting because it shows two big periods of trends. One in early January, where we had positive news coming out of Europe, the sense that the European authorities would do more to protect against downside risks to the euro area. Sharp rise in the Johannesburg Stock Exchange, sharp rises in stock exchanges elsewhere. A long period where not much has happened, and then the sense that the ECB would come to the rescue of the euro bond markets, that the Fed would come to the rescue of the US mortgage market, another sharp rise. So this probably tells us less about South African specific sentiment right now, more about the global sentiment.
And if we look at another way of examining the whole economy, that's through the currency, and we look at this chart, we'll see that the rand has been holding its own by and large during this troubled period of the dispute.
The rand is a notoriously volatile currency, so the chart here spans from about 7 Rand 40 to the dollar to 8 Rand 60. That feels like a pretty big range if you're on one side of that market or another. And surely enough, if we look at the dates immediately around Marikana, the currency moved about 4% in a pretty short span of time. So it can feel like a pretty lumpy flow. Why hasn't we seen more currency weakness in this period where South Africa has been in the headlines for all of the wrong reasons? Well, for one South African specific event that actually increases investor appetite for some types of South African instruments. On the 1st of October, South Africa will enter into the World Global Bond Index. What does this mean? It means a new wave of investors buying South African bonds. Ahead of that, for people looking to go short the currency or to sell their South African assets, they need to be careful that they don't sell cheap today and have to buy expensive after October. So certainly that's helped moderate some of the worst of the currency weakness that we might otherwise have seen.
Thanks very much, Jeff. So what we see from this is that although the South African mining industry makes big headlines and is very significant socially and politically and so on, investors have been able to take these problems in their stride.